Stop planning your move until you see the 2026 migration math. Last year, 450,000 people bet their lives on Texas, and 410,000 went to Florida. They were chasing the dream, 0% income tax, sunshine, and freedom. But while they were looking at the palm trees, the math fundamentally broke. In 2026, Texas property taxes and Florida insurance premiums have become the hidden income tax, and in some zip codes, they're taking a bigger bite out of your paycheck than California ever did. Today, we're looking at the data they didn't put in the brochure. Is the Sunbelt still a sanctuary, or have you just traded one trap for another? The 2025 exodus into 2026 reality. The 2025 migration data confirms that the American exodus isn't just continuing, it is accelerating into a calculated flight from fiscal failure. While California and New York lost a combined 600,000 residents last year, these movers aren't just chasing sunshine, they are fleeing effective tax rates that peaked at 13.5%. The undisputed heavyweight champion of 2025 was Texas, absorbing over 475,000 newcomers, narrowly beating Florida's 410,000 influx. However, the 2026 reality is grittier than the brochure. Data shows that refugee families from the north are trading high state income taxes for a 22% surge in Texas utility costs and Florida's localized inflation islands, where grocery parity has vanished. The moving trucks haven't stopped because the math in the blue giants remains broken, but as the Sunbelt nears a critical density, the cost-to-benefit ratio is narrowing. In 2026, the migration is no longer a trend. It's a desperate search for the last remains of a middle-class margin. The hidden state income tax. The 2026 fiscal landscape reveals that Texas's no income tax promise has a shadow, a property tax regime that functions as a permanent wealth levy. While the national average property tax rate hovers around 1.1%, Texas homeowners in 2026 are grappling with effective rates exceeding 2.3% in burgeoning metros like Houston and Dallas. Data indicates that a seemingly affordable $400,000 suburban home now carries an annual tax burden of roughly $10,400. Over a 30-year mortgage, this translates to $312,000 paid solely to the state, nearly the original cost of the structure itself. This hidden income tax means that even after the bank is paid off, the middle class remains trapped in a cycle of perpetual rent to the government. As 2026 assessments surge alongside infrastructure demands, the Texas dream faces a mathematical ceiling, where the lack of a paycheck tax is being cannibalized by the price of the dirt beneath one's feet. When the weather costs more than the rent. In 2026, Florida's Sunshine State, Allure faces a mathematical reckoning as the home insurance crisis transcends mere storm risk. Following the 2025 market volatility that saw 4 major carriers exit the peninsula, the average annual premium for a single-family home has surged to a staggering $6,200. This fiscal weight is compounded by Florida's auto insurance rates, which now sit 55% above the national median. Data indicates a grim milestone. The typical Floridian household now allocates more capital toward mandatory insurance premiums than the $12,000 annual average spent on groceries. This insurance tax has effectively decapitated the bottom of the real estate market. Without affordable coverage, traditional 30-year mortgages are becoming unattainable for first-time buyers. As 2026 progresses, the dream of coastal living is being replaced by a stark reality, where the cost of protecting an asset now rivals the cost of the asset itself, creating a barrier that no amount of sunshine can mask, where the paychecks actually clear. By early 2026, the economic tug-of-war between Austin's Silicon Hills and Miami's Wall Street South has reached a critical inflection point. While Austin's tech sector remains a powerhouse, 2025 data shows a strategic shift toward advanced manufacturing and energy, which added nearly 85,000 high-wage blue-collar roles with a median salary of $78,000. In contrast, Florida's Wall Street South movement accelerated with a 15% surge in boutique finance and wealth management firms relocating to Miami, though this growth is bifurcated by a hospitality-heavy base, where wages have stalled at $42,000. Crucially, 2026 wage growth metrics indicate that Texas's diversified energy tech corridor is currently outpacing regional inflation by 2.1%, whereas Florida's service-driven economy is lagging, with real purchasing power declining by 0.8% due to localized hyperinflation in housing and utilities. While Florida offers a prestige of finance, Texas provides a sturdier floor for those relying on industrial and tech resilience to clear their monthly bills. The $100 grocery bag test. Entering 2026, the battle for affordability moves from mortgage statements to the checkout aisle, with a $100 grocery bag test reveals a widening gap. In the Florida Panhandle and coastal hubs, grocery indices have spiked 6.4% year over year, driven by complex logistics and a 14% surge in commercial refrigeration power costs. Conversely, Texas residents benefit from a deregulated power grid that, despite past volatility, has stabilized to offer time-of-use plans, allowing savvy households to lower monthly electricity bills by 18% compared to Florida's monopolized utility structures. However, Texas's logistical vastness imposes a gasoline tax. Data shows the average Houston commuter spends $450 monthly on fuel, eclipsing Florida's $310 average. While Florida's surging utility bills act as a slow leak in the household budget, Texas's deregulated energy market provides a rare lever for cost control. Ultimately, 2026 data suggests that while Texas wins at the plug, Florida holds a slight edge for those living within walkable, high-density corridors. Is the $300,000 home extinct? By early 2026, the psychological threshold of the $300,000 starter home has transitioned from a market standard to a suburban myth in both Texas and Florida. Real estate data from the first quarter of 2026 indicates that the median price for an entry-level property in the Dallas-Fort Worth Golden Triangle has climbed to $415,000, while Tampa's inventory for sub-$350K homes has plummeted by 62% since 2024. This inventory vacuum has birthed the 90-minute norm, where affordability is now geographically tethered to extreme commuter corridors. In 2026, a family seeking a $290,000 mortgage must look toward outer ring exurbs like Sherman, Texas, or deep into Polk County, Florida, areas where the daily commute to urban job centers now exceeds 3 hours round trip. This commuter misery index acts as a hidden cost of living. Data shows that the wear and tear and fuel consumption of these 100-mile daily treks effectively adds $700 to a monthly affordable mortgage. Consequently, the 2026 starter home isn't just more expensive, it is depleting the one resource more valuable than equity: time. The American dream is no longer about the house you can afford, but how much of your life you are willing to spend on the highway to reach it. The crowded paradise. The 2026 Quality of Life Index reveals a paradox. The very freedom that drew millions to Texas and Florida is now being strangled by the weight of its own success. In the Lone Star State, infrastructure has failed to keep pace with a decade of hypergrowth, leaving the Austin and Dallas-Fort Worth metros with some of the most congested arteries in North America. Data from early 2026 indicates that the average commuter in these hubs now loses 142 hours annually to Gridlock, a 12% increase since 2024. Meanwhile, Florida's crowded paradise narrative is hitting a physical limit. Coastal density has surged, with beach access parking wait times in Sarasota and Miami reaching record highs, while the 2025 Census of Public Spaces shows a 20% reduction in per capita quietude. The freedom of the Sunbelt is increasingly interrupted by an infrastructure tax, paid in time rather than dollars. As Texas highways transform into permanent parking lots and Florida's serene escapes become high-density corridors, a critical question emerges for the modern pioneer. Is it truly a dream if your primary view of the American landscape is through a windshield for 3 hours every single day? The Tale of Two Futures. As the 2026 economic map is redrawn, a tale of two futures is emerging, separating the sustainable sanctuaries from the speculative ghost towns. In Texas, the Austin Silicon Hills gold rush has cooled as median home prices plateaued at prohibitive 7.5 times the local median income, leading to a net migration slowdown. Conversely, El Paso has emerged as a golden city, where 2025 data shows a 14% surge in logistics and cross-border trade jobs, paired with a cost of living index still 12% below the national average. Florida displays a similar bifurcation. Miami has reached a luxury saturation point, where 30% of new condos remain vacant as speculative investments, while locals are priced out by a $5,500 average monthly carry. In contrast, Pensacola is winning the 2026 survival race. Its military-backed economy and a median home price of $325,000 offer a rare blend of coastal lifestyle and fiscal solvency. For those seeking a 2026 sanctuary, the data is clear. The American dream has migrated away from the brand-name metros and into the value metros. Actionable success now requires looking past the 2021 hype and focusing on the 2026 math of El Paso and Pensacola. The final math. The 2026 verdict on the Texas-Florida rivalry reveals a landscape where the American dream is no longer a monolith, but a specialized calculation. According to the final 2026 scorecard, Texas remains the undisputed sanctuary for growing families, with data showing a 15% higher per capita investment in suburban school infrastructure compared to the Sunbelt average. For those seeking space, the Lone Star State offers a median lot size of 0.25 acres, nearly double that of Florida's high-density developments. However, Florida secures a victory for retirees and lifestyle-driven migrants. With its lack of state income tax and a 2026 cost of living adjustment that favors fixed-income earners, it remains the most tax-efficient weather haven. Yet, a new 2026 data trend is emerging, the survival pivot. For those making under $65,000, the math of the South is starting to break under the weight of Texas property taxes and Florida's insurance premiums. These survivalists are increasingly looking toward a third option, where the cost-to-income ratio remains sustainable. While Texas wins on legacy and Florida wins on lifestyle, the ultimate winner of 2026 might not be a southern giant at all. The real disruption is happening in the affordability frontier of the Midwest, a revelation saved for the next investigation.